Okay, morning all. Or afternoon, sorry. Hope we're well. How are you, Bobby? Jason? Doing good? I'm guessing you can hear me loud and clear. Those baritone voices. All right. So, welcome to the live stream. It's Monday, the 31st of August, so end of August. Might be a bit of end of month rebalancing into markets. I was just reading somewhere about bonds, bond markets and stuff, so I'd be interested to see how that goes. We'll have a bit of a chat today about mainly on the US dollar. Just want to take a look at the US dollar and sort of link markets, what could be happening. Of course, we've gone about this for quite a while. US dollar got hit basically on Friday. And it wasn't the US session, it was sort of started off probably early Asian session, I'd say, I think it was, and just kept creeping down all day. And then by the time the European market opens and then the US market opened later, it was well underwater, and that's just triggered a bit of safe haven buying. Gold rallied, but it's not. I don't suggest that's safe haven buying. I suggest that's just typical move on the US dollar. If US dollar rallies hard from here, gold will come off. Simple as that. Um, what I wanted to go over too, you can see we've just got the Hang Seng. I'm just keeping a quick eye on that. I don't know if it's going to move or not from here, but I'll just touch on that. What I might do if anyone's sort of keen on it, talk either do a video or say a 10, 15-minute stream just on what I'm looking for on the Hang Seng and why we do moves. Sometimes, like say Friday, we had 20-point winner and the thing rallied about 100 points later on. But it's all about risk management and what the market, what's giving you at the moment. I mean, you never know when the big move is going to kick off, but it's worthwhile having a bit of a chat about that if everyone's keen for a different stream. And I'll probably record it we'll put it on the YouTube as well. Yeah, sound no problem. And it looks like what we've got here is a bit like what we saw on Friday. Just trying to find it. I had a snapshot somewhere, did I? So this was the move Friday. We'll just go over it while we're looking at it. Can everyone see that okay? This is just a snapshot. It's not the actual chart. So anyway, what you could see is the market was getting supported. Actually, let me just get the 5-minute chart. It might help a bit more. Here we go. So this is the action from Friday. All right, forget about this. This is just sell off. This is when it was at Japan, Abe, Abe, resigned apparently for health reasons, and he wasn't. Apparently that was not known, but he wasn't too healthy, and there was maybe suggestions that he was going to do something. But either way, it caught the market off guard. Yen rocketed up. US dollar, continued down but it was already in the moving down anyway. But that changed the tone of the market all up. You can see this market boom about 3 o'clock, I think it was. We got the highs 4. No, it was 4 o'clock that rolled over. I thought it was 3. Anyway, that's quarter 5, isn't it? Yeah, but if you go and look at the Nikkei got smashed about that time, so it wasn't too flash. Mine a 5-minute chart, pretty sure I am. 2010, yep, that's it. Right, so this is the action we've marked up our levels. So we had a couple of levels, I think here. It's probably not looking so great. The chart's all squashed up a bit. You can see earlier on, it started on the 1 minute. It was starting to hold and look quite nice. There was an entry there, which I didn't alert to. It was just really early in the session. It was just when the Hang Seng, so that the futures open at 11:15 and the market opens at 11:30. So 15 minutes, that was about when it opened there. Ticked off, but it was all this action here that, and I did get caught. I think I got caught twice in here. Small stops, once you realize you're wrong, you stop it out pretty quick. And we alerted it in here. We made 20 points on that, but then had to sit through this action, but it was here is where I wanted to talk about is something that really started to look a lot better. So if we get that up, and I'll just show you on the one what I'm generally looking for. So with this action, you can see the market holds. It's important that we've got to realize it's holding above a certain level. So once it's holding above a certain level, if it's going to be a flush, the market's going to pop up, flush, and come straight back down again. All right. So if it's going to flush that level, which is what you're looking at here, the longer it holds and consolidates those holds and start, you can see it's starting to creep higher. So there was some sellers there, but the buyers were soaking it up, all the selling pressure. So sooner or later, it's going to come to time where your buyers are going to realize, sellers are going to realize they're on the wrong side of the market. And that's what you're looking for. And it's generally when you get that sort of slight contraction in volatility. So that's about here when we look at the 1 minute chart in a second. It started to contract. You can see the market started to roll over, and sellers might have been a bit more active here. And I think I did make a small gain on the downside, but it was negligible considering. So I might have had two longs that got stopped, a small gain on the short side, thinking it was going to roll, and then pulling out and just watching it from there. And you can see that this was the key area, and it'll show up better on the 1 minute chart, which we'll go to. So all this action here, it gets suckered in. So the big question is how do you stay out of that? And there's going to be times if you're trading purely, and this is why I will use different charts, 5, 10, 30, all that sort of stuff to get an idea. Now, 30 was up, 30 was holding. If you're looking at the next candle start to rally, it's all looking good. So the 30 was pointing up. And of course, that takes a lot of time. The 5 minutes pointing up, and it's just the 1 minute, which I use for that extra bit of, that extra layer of, am I going to be on the right side? Because you'll see the action change, and you'll see that clear. If I can just get that up now. So I just sort of started chatting about it now because we might not be getting that on the Hang Seng. It's starting to break down a bit. Anyway, so the action was there, not there. It was just prior to that. So you can see this was the action we're looking for. So this is earlier on. The move we're just talking about in the 5, which that looks nice. There's nothing wrong with that. What I'm always looking for is I used to use a 20 EMA and a 50 EMA, and I didn't really sometimes use a 200, 150 or 200 EMA. Now I'm just been playing around lately with the whole moving averages. I've got a 20, 50, and I've got a long-term weighted moving average, which is the general direction for me of the overall market, which is this grey line. Some I don't know if trading platforms all have the whole, but I tend to use it quite a bit. I think it's quite good. It sticks closely to the MA. But what I've noticed when I look at the one, I like it a lot better on the 1 minute chart. So when the 20 is above the 50, which is above the longer term, then, and especially if you've been contracting, you know where your levels are. And when we're contracting like here, you can see sort of these minor lower highs, higher lows. It's just below a level, just after the open. Things are starting to tick up. That was a good little entry in hindsight. And it was above. I like to see the MACD above the 0 line and starting to rise, because that's momentum. It's just a momentum indicator. If you can start to see the price action is getting, any sellers getting soaked constantly, and you see it start to lift, that was a nice little entry. I mean, it was more aggressive because the market had just opened and they can tend to flush and then rinse you straight back out again. But as it turned out, it was quite nice. It was this later entry that was harder, but it turned out really nice. And the reason why the 1 minute was so important, you can see that expanded. Then we started to see action below the HMA, it is the whole moving average action below, which is just a bit of a heads up where, okay, we could get some contraction down, we might get anything, but it's going to get a bit choppy. It was up until about here when the MA started cross back up again, and then you've got them all in line again, 20 above the 50 above the longer term. So they were both above the longer term most of the session, but you can see distance between the longer term or your MAs is quite important if it's extended. You can see that momentum was quite extended, starting to back off. I love it when it starts to come back to the 0 line and start to lift again, which it did about here. So when you can start to see that lifting, you got the MA starting to point back up again, so the 20 above the 50 and so on. I entered long here. It was just in here. So I didn't get to alert it to the group. It happened quite fast, remembering this is a 1 minute chart, but I was trying to cover a small loss as well, which turned out quite well. I mean, it started to lift from here. I think I held it somewhere around here, then got flushed out. And that was my own stupidity, really. But you can see when sellers step in. Sellers step in. It's the same thing we always talk about with shares. The price action. It's all your psychology in the price action. When you got sellers outweighing buyers or buyers outweighing sellers, who's going to win out? And you want to get on the right side of the action. When you start to see, it's a lot clearer. So in here, there might have been. I think I went long here. It's really not clear. It's more anticipation, bit of FOMO, fear of missing out. Just when that price action wasn't as clear. I mean, it was quite clear here when to start to kick off. You got to break, but the problem is the stop also is quite wide, so that was a tougher one to take, but it did turn out all right. Here, things are starting to look a lot better. You've got, if we just drill in on that, contraction down, holding the lows, looking nice. Once you get this expansion, I'm happy to take a break of a couple of previous candles. The green candle, I think I took it just up here, a little bit late, but it was up sort of near these highs, sat through a bit of this, and then we started to expand again. And from there, it's just a matter of, I think I've said many times, I'm happy if I can not get flushed out. It's just follow up with the MAs. Follow up the 1 minute candle. Stop, and see if you can raise it as much as you can. Now, I didn't do it on this time. Got squeezed out of that. But anyway, it was still a slightly profitable day overall. Could have been a lot better. But I think talking through the entries is quite important and why they're happening. So that's, in hindsight, what I'll do is put together a video. We'll probably go into a bit more depth. We'll do a setup. We'll talk through the plan for the day, why the levels we see as important, what action we're looking for, and then, just some examples of where the entry could have been. And it's always good. I love, even though this was chop, it played out beautifully. And that last trade was the winner, was the one that really kicked on. Look, it went a lot harder than I thought, but it did kick on nicely up until the close. There's a few key things to watch out when you're looking at the Hang Seng when it moves. But we'll talk through the entries and where your risk lies, what are we looking for, when we're right, when we're wrong, all that sort of stuff. So let's go back and look where it is at the moment. Just as we've been talking, this is sideways action. So I was looking for that to hold in here. I wouldn't mind that, seeing it pop up, pull back, hold, and then go. But instead, it's still a little bit of a flush mode, and it's a bit tougher to you can see with the Hang Seng at this stage. It's going to be, look, there may or may not be an entry here. We've still got, these are sort of your key levels. We may start to lift later on. We may roll over. I mean, I don't know. I was expecting that was going to be similar action to we saw on Friday. But at the moment, this little push down, you've got to take note of that once it flushes down so hard and takes out some key levels. If the buyers are going to be strong, they're going to have to get reset. They're going to have to get active again and start to lift it from here. There is a chance that if we start rolling here, it could be a better back and fill back down to 25,530. All right, so what I'll quickly do is we'll look at the US dollar because I think it's important what it's moving with, what's happening. So just looking at that Hang Seng. There's had quite a few levels that have held, haven't they? So that could roll. Easily, that could really start. You can see there's momentum starting to fade here. Now, as a short, unlike Friday where we started to hold and we're grinding up and we started to pull back, flushing a few longs out. I can't see it, but we flushed a few longs out and then started to lift again and hold a higher level. At the moment, we look like we've just, it could be the reverse scenario. Just see whether this starts to push down, and then you'd want to be looking at the one. It's gapped up quite strong and it's still holding this 756. So there's still, we could be seeing a flush, and then if we start to reclaim back above that level on the on the 5, we start to hold. Still got, it's coming to 1 o'clock, close at 2, an hour and 15. There's still room. Problem is, this is the market today, and it's just done absolutely nothing, is it? We've got the Nikkei that rallied hard, which we're looking at. It's doing nothing at the moment. All right, we'll get into, like I say, in the US dollar. Just bear with me 1 second. I'll just grab that up. There we go. What's everyone's view on the US dollar at the moment? So it's hovering around that 92.30 zone. This is on the daily, so we'll start off here, and then we'll get into some shares. Let's go back to the weekly. So this is a level that I was thinking maybe that was going to be a higher low, but then it's broken down. But instead, it's if you take it across from this low here, low, we just missed out on coming there, got supported prior to touching down that support line, and then we're right there now. So it's kind of important to see whether we hold up here. If this selling is going to continue, the next stop on the weekly, I mean, there's nothing really for a bid zone in the way of a bid zone until you get down to, you're breaking through 90. Now, what does that suggest? If you're breaking through 90, everything linked to the US dollar is going to obviously move in the opposite direction. Aussie up, currencies up, even Bitcoin. Bitcoin is going to find some strength, and it looks like most of the markets are poised, sorry, for that US dollar capitulation. Now, when I said I wouldn't think it'd get through there, we're back down there now at that level. It's still testing. It doesn't mean it's going to break yet. The market is still holding lower highs, so it's looking a bit weak, obviously very weak. There's still talk, nothing's really happened in the way of stimulus, but we still are holding. So we've got this key level up here, push through. If that was really, really weak, I would have expected it to extend that break a lot more rather than backing up all the way back up into the zone. We're tracing over 50% of that move down. I would have expected that to hold lower levels as the sellers are still trying to build, still trying to push. Instead, we've bigger pullback, straight back down to the zone again. So now if it holds for a second time, there might be a few shorts poised to get squeezed out. So you've got these key sort of levels right up at 93, 93.40, then up towards 94. But at this stage, the pressure's on, and we've still got these minor inside levels. We're on the hourly chart. It is the minor inside level that is holding at the moment, which if that starts to break or come under pressure, we might see a bit of back and fill. Back and fill meaning we start to grind back up again, and we might flush, come back up, and do the same thing we did here on a smaller scale. But we'll have a see. We'll wait and see. So it's very important to be watching that US dollar at the moment. If that starts to break down and we get some sort of action, which we saw on Friday like this, I would expect us to pull back to this longer term MA if it's going to happen. I expect it to sucker in a few buyers off here. Support's holding. If support gets flushed, to me that's not really a sucker move, especially if it backs and fills, because it's just chopping around people, and I think that would bring in some sellers, squeeze them out, and more to get it to push back up. Now, if we push back up from here, we might get some buyers starting to lift off that zone, and the longer term sellers start to come back in again at a lower high, somewhere around maybe that 92.70 zone, and start to really push it down and really put the pressure on. Again, it's interesting to see because there's still that Democrat Republican issues on stimulus. I think Trump bumped it up 300 billion from 1 trillion to 1.3. Was it the Democrats still want 2.2 trillion? I think it was, or more. They expected to say that they need more to help people out, help US citizens out, and then see the stock market just continuing to rally like the recovery is on track. Recover from what? We're already well above all-time highs on the S&P, on the Nasdaq, and we soon will be into new all-time highs on the Dow. So it's kind of funny to see news stating, "Oh, the recovery is on track." It's already recovered. We're already anticipating that. So we're not really recovering now. We're going far and beyond levels. There's some stocks that will be still beaten down a bit, but and we're still looking at further stimulus. Maybe the market's just going to keep going in that one direction up. Momentum's going to continue to go. It's too hard to change at the moment, way too hard. It's well entrenched. So the bulls are well entrenched because sellers have tried in the past on pullbacks. Pull back off the high, they jump in, sell, get squeezed back out, jump in, sell, get squeezed back out. So you can see those moves are getting shallower and shallower on the downside, and the uptrend is getting more and more entrenched. So if we get, in regards to this US dollar, we start holding off that level, I want to see a sharp move up. I want to see it start attacking back up here to 93.30 or thereabouts, not just sort of grind back up. And, you don't want to see a move like this, it sort of grinds back up like that, because that's not conducive of really strong buying. You want to see something plow out like that, maybe a pullback and plow up again, because then you can see that there's going to be potentially a short squeeze, A short squeeze taking us where to? We don't know. Whether it takes us through this level back up to here, and then I think we could have some issues, because that would suggest anything linked to the US dollar is going to start heading south, like Bitcoin down, Aussie down, all this sorts of stuff. And whether or not that would suggest that there's going to be no stimulus, what we're thinking, who knows at this stage. I'm still leaning that that's going to hold, probably for the fact that to see it go down to below 90 is a massive. It's going to be massively bullish on gold, your commodities. So you just bear that in mind. It's worth watching to see what's going to happen, purely from a Aussie ASX point of view. So if we go over to, it was gold, it was interesting. If you look at, had a good rally. It's this daily chart that I want to touch on. Daily trend still up off the leg. This leg up here, it's contracted. I mean, it's got a lower high, but the market hasn't broken. It's still in an uptrend from 1672. Pushed through 2000, got to about 75 thereabouts. A big flush down. So any of the weak hands, meaning anyone sort of late into that rally that hasn't established a position well before, late into the rally has been squeezed out. So I think now that we look like the price could be starting to lift again. I mean, that's just a daily chart. We're starting to hold this inside level. Just put it through here. You start to drop it down. That's your key level through there, 1911. So we could easily. I would love to see what happens on a pullback, to see if we get we get a pullback and it starts to get supported at a higher level, maybe 1940 or thereabouts, but not just a flush into the level and bounce straight back again. I don't want to see spike bounce, spike bounce. I want to see it sort of grind down and then get supported, and then see what happens on the first pullback. Is it going to accelerate higher, which I would expect? And then you really just looking for an entry for that rally, and that would suggest if we start getting a kick on, that market suggesting there's going to be weaker US dollar. If you look at crude oil is constantly grinding higher, suggesting potentially some further weakness into the US dollar. So if the US dollar snaps back from here, back up through 93 and so on, like a sharp move, it's going to catch everyone. Gold bulls off guard, oil bulls off guard, Aussie bulls, all these sorts of all the bullish moves, it's going to catch them off guard. And the harder that US dollar goes, I think there's going to be more people squeezed out of the action. But on the flip side, if it starts to tank, there's a lot of people waiting for that US dollar move to kick off if it does start to tank. So there might be a few false starts, but gold's suggesting that it's going to perk up. Crude, like I said, is also suggesting that it's a bit of a grind here. Any momentum on the upside is struggling. Like you get these spikes up, consolidate, and then flush out lower. But these flushes on the downside are getting soaked up quite well. Probably have to drop it back a bit more. You can see it is a bit of a grind up here, but it's still rallying. It's still going in the right direction. Okay, so that's suggesting that we could be seeing some weaker US dollars, US dollar move. Also, copper is a bit more bullish. So we've had this move up. We're expecting a bigger flush than that. Considering the macro environment and the numbers coming out, problem is the market's brushed aside all that, and it's just focused purely on stimulus kicking off. So if we continue to not find out about stimulus, I don't see why this market should turn. US dollar, it'd be interesting to see what they do if stimulus, like we've mentioned a few times, if stimulus comes out less than expected, and they tend to agree on something somewhere in the low, high trillion mark. Sounds ridiculous. High $1 trillion mark. 1.8. Say they come to agree. They come in the middle. Is that a lot less than what the markets was expecting, or is that about right? How does the US dollar take it? Is it just pure the fact that there's more dollars going into the market, which is going to sell off anyway? It's going to be interesting. I'm suggesting that the US dollar's factored in. People like to factor in. They don't. It's not that wait and see kind of environment. So we've got here copper. Yes, like I was saying, copper, that flush down here got supported through 277. When we started to lift, this to me is looking a lot more bullish. Okay, we're only on the hourly chart, but after this move, if we didn't see any big flush down and it was constantly getting supported, that's suggesting also it wants to go higher. And if it wants to go higher, it's suggesting that potentially that US dollar is going to get pushed through that 92, say 92 even level. So it's really something we have to keep in mind and keep on top of to see what the overall markets are doing and see what setups we can get. So if this starts to pop through, US dollar starts to fall over, we're looking for pullbacks to see if we can buy into pullbacks, get our setups, and see if we can ride that momentum. Okay, that's probably about it for just the US dollar. I mean, we have been speaking about it quite a bit. It's just that big sell-off. We had that chop around. They're still talking about it. Moved quite a bit when the US Federal Reserve was talking about an average rate of 2% rather than for longer, a lot longer. Whereas a lot of bulls, potentially US dollar bulls, were thinking that they're going to start to raise rates soon, which really should be bullish. I don't know. I'm reading in different areas where people are saying, "Oh, raising rates or that inflation is going to be bearish on dollar." Don't understand that when every other time it's been bullish, because maybe the US dollar, US economy is doing better than what everyone thinks. They thought Europe might beat them to the punch and recover quicker, but the US seems to be recovering quite well, which means anyone that's been flowing out of the US dollar is probably going to flow back into it. Or whether you're just looking at it going, well, markets on all-time highs, do we really want to be throwing, if you're going to buy back into the US dollar in a big way, say big funds buying US to invest into their market, is there going to be many areas left to invest into with, markets constantly pushing to new highs? So we'll see. All right, let's get into, get rid of that. Let's get into, let's see what that Hang Seng is again. Oh, we're bouncing. Here we go. It's still stuck in that range, but you can see if we can hold in here, I wouldn't mind seeing a pullback on the 1 minute chart, but I want these EMAs to hold up. So you can see what we always talk about. This is just a side note. Markets go from expansion to contraction, they consolidate sometimes in between. So when I'm talking about that, when you're going with the trend, you've got expansion higher, a pullback is contraction. And we're looking for that expansion again on the longer term trend. You're setting up your charts and your entries according to that sort of philosophy. Now we've expanded higher on the Hang Seng on the 1 minute, we've consolidated. So essentially we've contracted. We're letting the MAs catch up rather than contraction back to the MAs and looking for an entry long off a higher low. The market's going sideways, and it's done that the last few sessions, like I was mentioning. So this could be a prime area where we're going to go back into expansion. All right, so that's what we're looking for. As long as this, we don't sell off too hard and we can't start to come back down to these lows, as long as we don't do that, and we're going to hold a higher level in here, there could be a long on the cards and a breakthrough, because you've also got to remember what we're doing, or what the market's doing, is gapped up. You got sellers, they could be building a bigger position. You might get your bigger punters building a short position. You might get these smaller guys that keep, every time we touch and fail, they're going short. Whether they've been flushed out when it bounces back, but there could be a lot of juice on the short side that the market's built up by contracting for longer and consolidating sideways for longer, that could get squeezed out quite easily. All right, so it's got two things. We're starting to sit on the MAs. We're looking like we're going back into expansion. There's a lot of juice up here that have sold it. They didn't get, they could argue that it's going to roll. The market's going to roll over, and we're going to start to get a move back down to, people looking for that gap fill, all that sort of stuff, a retest of 25,530, all that sort of thing. That could be their argument. On the buy side, if we start holding in here, to me, this is sideways. If we look at the 5 minute too, the sideways it's still sideways, but there's no reason why it can't lift, because the momentum is still, fairly entrenched. It's just backing off. So this market's backing off and it's not going down, as in momentum's backing off, but it's not going down, it's going sideways. That's kind of bullish in a way. So we're looking to the 1 minute for a potential entry long. All right, we'll keep an eye on that, see how it plays out, and just see if my thesis is okay. So we've got a couple of shares that I'm looking at. We unfortunately got kicked out of OPY today. News release, or their earnings reports opened up, okay, bang, spiked down, straight back up. So we're stopped out, locked away some gains, which is okay. And then the market is sort of just hovering there. It doesn't look, it's down 5% at the moment. It doesn't look too crash hot. It's still, that spike down is going to clean out a few. It's retested that fall zone. I mean, we could have had a stop a bit below the entry, could have had it down, but I think considering this market, it's kind of risky. For me anyway, the way I feel that with this market, if we can roll, we're going to wake up one day and it's going to be down 500, 600, 700 points in the Dow. We're going to be scratching our heads, watching the gap down on the open and it'd be a bit of carnage on the ASX if that's the case. So I'm always wary of that sort of thing. BGA we still got looking nice. Locked away some gains on that. See if they can push up through 550. It's still that longer term weekly chart that looks quite good. Not a massive lift in volume, which you would like to see once it starts kicking off, but it's that weekly chart that's looking good. Move down through here, through 4. We've had test this way back in 2015, and again in 16. Come back down and push through. Selling pressure was down, but it was getting soaked up, got soaked up again, and that's when the market caved in. So about March, when it caved in, say you're looking up at this top chart, it was getting held up okay when the whole market was just heading south. It was probably coming off, it already done the majority of the selling the year previous off the highs, and since 2018, come down quite hard. But I like the fact that it was getting soaked up here, and now we've got this weekly higher level, daily higher lows holding, looking strong. So I think that's going to go through 550 soon. We'll just keep an eye on that one. The other few that I've seen, PPK, it's more PPK group. Not sure what they do. I think they do mining stuff, services, capital goods, farm, industrials, engages in investment in publicly listed company, private design, manufacturing, distribution of portable underground mining equipment. Okay. So that could be signaling a bit of a recovery or a bit more activity in the mining sector with these higher commodity prices, if that's the way it plays out. It's that weekly that I kind of like. We've got big sell-off, March, February, March, April. Got smashed down, bounced back quite hard to 475, but this is secondary, that was soaking up at 3, which is very important. So that to me suggesting, if that's the case, low to high, I'll draw it up, low to high. Just give me a little drawing tool, and we get into yours, Pete. So I thought I'd just put out some ideas that we've got. All right, there we go. So it's that, the fact that it's holding up there is quite nice after this sell-off. So you've got this big leg down. I mean, that's going to flush out anyway. You've got that level there, held, retested there, held there, bounced. If that was really weak, for whatever reason, it was going broke, whoever, no earnings, no nothing, it should have gone down a bit harder than that. So even if that's a longer term contraction, all right, we start to get, I don't want to see a break at that level and buy, because then you're right up near here and it could be a bit of a flush and you get caught on the wrong side. I would rather see after this move up off that low, which is key, getting supported at a key high level at 3. I'm basically just looking, if that's a leg up there, just looking for what happens on a pullback. Do we hold the top end, a minor pullback there, and then you're buying the break with limited risk and looking for a continuation of that move up. Hopefully, if it's somewhere around 4 to 425, then we've got expansion up to 5. We could have 2, 3 to 1 on our risk on that. And if it just blasts through there and it starts to look up towards 7, there's a lot more on the cards. Okay, but either way, the fact that it's gone on, had a pullback, key lower high before the market, that was when the market sold off, straight back down, held that zone. We lifted, we pulled back, and we held a higher level. Holding a higher level, buyers are getting active. It's as simple as that. So from there, I'm really just, waiting to see if we can get some sort of entry. I want to see an entry off the MAs. Okay, maybe like something in like that, buy the break, risk below, or whatever it is. I want to see that sort of pull back to the MAs. I want to see it stick, 350, 375, and then buy the break up. All right, was the other one BPT? I think it's much of the same. Big sell-off, February, March. February, March was starting to sell off prior to that. It was starting to sell, January, and then just got hit down even harder. We've had a leg up here. Actually, one thing I want to say about this one, I just forgot to. Remember, we've got this leg up. If this is your initial leg up and that's a key high level, you're extrapolating that out from, say, 2 to 5, $3, $6. That move up, if you extend that out, takes us somewhere around 6. Okay, which suggests a break there, longer term break, which you probably wait and hold it to see if it gets up to 675, or even breaks 675. So there could be a bit of juice in that one if it gets going, if it starts to look good and we start to get some volume coming in and supporting. Let me just look at the weekly chart on that. All right. So that next one, BPT. it's more, similar type of thing. We've had that sell-off, lifted, next wave of selling, it was getting supported through $1.40. And you can see, this is all minor details, but it's worth taking note of. High lows is what we want to see. High lows suggest buying pressure. And the same as on the downside, lower highs suggest selling pressure. It means that someone wants to get out and there's a lack of buying. On the upside, it means that someone wants to get in and there's a lack of selling pressure. So markets will swing, we obviously know, depending on the environment, depending on a few different things, but there's always sort of that fight between buyers and sellers. Right? So when it's a fight like this, there is no buyers, okay? And sellers just want to bail. And anyone that's going to be sitting there getting hit on their bid and then someone else watching going, oh, I could put it a lot lower because this thing's getting hit hard and they get a better price, they might be willing to hold through, some ups and downs. But either way, it's that sort of move. Let me show you. That sort of move there is just a lack of buying. When you've got this sort of chop here, there's some selling pressure, but buying pressure is winning out. Buyers are stepping up at higher levels. They want in. Okay, so you've got to analyze that. Same here. This move is kind of like the opposite to this. There's a lack of selling pressure coming in. The market's moving up. So you've got analyze your risk. You know where it is. You enter. You watch it go up and just watch to see what happens. If there's a change in dynamics where the sellers start to jam in, like here, okay, what's going to happen? We had this big sell-off. Maybe I took some off the table. Maybe I didn't. Maybe my stop's now there. We start to lift. Actually, when we start to lift here, I could raise my stop. What happens? Inside level, start to lift through that previous high. Okay, we're on raising stops, and we got stopped out here potentially. Okay, but either way, that move up there, there's a lack of selling pressure in the way to cool that move up. Does that make sense? So it's all about buyers and sellers. What are they willing to do? What are they going to show us? Are they willing to step up? Are buyers willing to step up at higher pressure? Is there sellers stepping in, to pressure that back down again? And that's where you got your higher lows. This move up here, you got higher lows are the key. If they're not willing to press it down and someone's willing to support it above that level, then yeah, it's an uptrend. And the same on the downside. So if we go over to Beach, I'll just draw it up. This is, this move here, flush out. It was looking good until then, and that was your key level. So we've got, key levels, expansion, contraction, all part of one move. Expansion, contraction, expansion through, fail. That to me, if we don't go through like we did, here we started to lift and just kept going, then that's not a good sign. So that's your longer term waves or moves, expansion, contraction. We start to lift, we got our entry, higher, low, probably here, entry, higher, low, look for expansion, and you're just looking for that sort of, rinse and repeat of that price action. Okay, and in here, similar type of thing. Market's getting supported, maybe buying here, risk below, goes up. All right, so let me just clean that up. That's your level there. So the fact that we got through and then started to fail, you've got to look at your minor levels, holding that most recent leg up. Your minor levels here, maybe minor levels here. Do they get broken? If they get broken, it's kind of, you got to start stepping back. All right, who's going to be under pressure next? Are they going to be put under pressure? That gets broken. Okay, that's okay. We get broken. It could just lift through. Who's to say it won't? The fact that we come in, sellers start stepping in a lower level, buyers are starting to step aside, suggests that we're going to have a change in trend or a move down. Especially couple that with a flush of that previous high and it didn't kick on. If it's strong, should have kicked on. Shouldn't have been looking back. All right, so you've got to have all these things lined up to say, like I said, paint your story, build your story, what you're looking for, and then if it doesn't play out, you get out. If it does play out, you stay in. You just manage your risk on the way up. So what we can say is after that move, it was already under pressure a bit. Coming into February, then we got the February sell-off. That might have been extended. Okay, so that move down has cleaned out a lot of these buyers. Anyone that's not out is either sitting on a handy loss or really committed to the stock. But it's not looking good. So it's only now that we've got a leg up. You can see that sort of grind higher. That's a bit of a grind, which you would expect after that move. People are going to be tentative. There's still, the macro environment's still rubbish. It's still rubbish now. Crude oil wasn't looking so good then. Back then, there was some buyers in there because you've got this kind of move down, there's always those opportunistic buyers, but anyone waiting for a bit more confirmation could be starting to get it now. And the reason why I say that is because you've got that 140 level holding. I want to draw that bigger. I want to show you on a bigger scale. That's not really it, is it? Anyway, we might have to deal with that. I know. Sorry, I just one tick there. Let me get that. Let me get that. There we go. So you got move down, getting supported up here. So that's your expansion higher. A lot of markets where a lot of stocks were you're seeing that kind of expansion higher or that kind of trend higher. That could be that's expansion, that's contraction, and we're looking for, stocks are unique. When you're looking at a down move like that, a quite hard move, you got this sort of grind high on an FX index or anything, it could easily get smashed again. But it's a bit different on shares. Shares can only go to zero. After that kind of sell-off, the shares are basically geared to go up. As long as you've got a good stock, they can go to zero and close down, and away you go. It's all done. We're looking at BPT, Beach Energy, on the ASX. Let's put that in the chat there. BT on the ASX. Oh, EASX on the ASX. That makes sense. All right, great. So we've got that there. We're contracting. I love the fact that we're holding that 140 zone, and there's this minor things suggesting that we could be looking to expansion again. And this is key. So that was your key level, and it's only minor. You're going to have to look at a chart yourself. We're getting soaked up. So that move down, if that was weak, it should have blasted through, extended this low by a lot more than it did before we had a pullback. And then we had this pullback. Instead, we had that pullback. Let me just take that off. We had this move down to get the low on a minor scale, pop back up, soaked up again at 140. Okay, then we got this move up. It retested this lower high. Then we got a little flush. Okay, then we got buyers starting to step in. So you can see that bit by bit, sellers are starting to run out of puff. All right, and then we got this lift up. So for me, now we're getting a similar action. We're starting to hold inside higher level at say 145, and we look like we're ready to launch. So I'll probably be happy to buy that through that high at 162, 3, 4, whatever it is. Buy it through that little high there, 62, stop below and see what happens. Okay, because you can see that then you've got this leg up. Potentially there's going to be another leg up. We could be looking to 2, even higher. And it's second time around, it might start to get a bit more of a run on. So I hope that makes sense. We'll get onto your stocks you got there, Pete. So it looks a bit more, you can see here, it's looking a bit better. Flush, hold, high level. So we're anticipating this high level. If the market starts to push through this low now, I'd forget about it. We could roll over, go straight back down through 140. But the key, we're anticipating this is going to hold as a higher level, minor higher level, off 140, which is a key swing level on this longer term. And then we're at least looking for a move up to this high. Say your entry is at 163, move up to the high of 181. You've probably got a chance to go back to break even at least and just see where it goes to from here. If we start to ramp up through 180, then you're looking for a lot higher levels. Okay, and I think that's that could be a real good one. Cheers, Chris. All right, we'll go over to Pete's. What do you got there, Pete? SRG. That's the one, the code I was trying to think of. What's happening there? That was a bit of a mess there, wasn't it? SRG Global. Let's forget about that. Market's down. All right, so this for me is probably a tad extended into that trend. You've got some volume stepping in on the lows. Good thing is, we got that sell-off in March. Bang down. Let me draw that up. It's extended at the moment, and it's not what you want to see if you're going to go long. Take it across here. Okay, we're starting to lift. We've got levels 17.5 cents, even probably around the 20-cent mark. You got that sort of zone there. It was getting soaked up. Sell-off was soaked up here. We bounced. soaked up again, okay? And then we start to lift. And at the moment, we look like we're still sort of all in, suggest this is a bit of a swing level, 27.5. So you get a lift. We could be looking to lift back up to 40. So maybe if you go from 20 to 30, 10 cents, somewhere around 27 to 47, 27 to 37. So it takes it back up to these highs. First leg up, pull back, secondary leg up, takes you somewhere to around 40. Okay, so let me just clean that up. If that's the case, are you going to be late into the trend? We're getting a bit extended here. What is a weekly? A weekly doesn't say anything, does it? So when you're getting a bit extended, it doesn't mean sell. It just means be careful on your entries. If you're going to go long. And to me, the entry was somewhere back here, with your risk below, just because we've got this minor contraction. It was starting to get held up at 27.5, rejected, soaked up, start to lift again, bit of a breakout. And there's a way to trade, rather than just trade through the high here. I'm just trying to explain it. It might be better to say, so we've got to move up. Okay, you've got your pullback. So a lot of times you're looking to buy that break of that high. When it looks really nice, there's another way to buy it, and it could be that I'll just change. Just assume these are not all just green candles, but each move is made up of ups and downs. Candles, 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 and on the way down, same thing. That pullback's made up of maybe a few days. What I like to do is when we start to see a break, you can anticipate it. Maybe you might take we call it a HH, higher high on these daily charts, as long as these lows are holding, breakout. What you're doing by taking that break, a couple of days, take it back, even up here, a couple of days back, you break the high, which could have been, it's probably around the 30 mark anyway, 31. It's not so clear here, but taking an entry there with your risk below, you're refining your risk quite a bit prior to the breakout of this high, which was somewhere up here at 32.5. Prior to that break, it's a lot riskier because there's not as much confirmation, but you're taking a lot less risk. You're front running that break. As soon as you see that break of this level here, that break there, you're already up, and you're buying well and truly in the unknown. But it's a really good way to, once you get a couple of candles like that, a downtrend is generally a pullback even. Generally, each day is going to be down. It might chop around, but when it starts to lift, it's not a high probability, but what you're doing is trying to pick that swing level when the trend is up. The trend is up here. We're sitting on the MAs, looking good. You're trying to take an entry like that, which is a bit more aggressive, like I said, but it's front running that break of the high, and where you'd probably normally enter, especially when you're getting a bit extended. It's not. We've already broken out here. We've had some movement there. Had a bit of expansion there. We've had support holding here, starting to expand again. So it's not really the unknown of this leg, and we're starting to run in that 40-cent zone where it could get a bit of pressure. So it's a good little entry just to minimize your risk and potentially take out more gains, anticipating that it's going to hold off those MAs. Now, if it doesn't, you could be quick to get out. You could use the reverse. We start to fail off this level, start to head south. You might take the second down day. Okay, you're out. Or the third down day, you're out. Okay. Does that make sense? So I might go over that with a bit more, make it a bit more clearer. It's something we do use on, it's not going anywhere, is it? On, what are they called again? Indices, a lot more. Just trying to show you an example. There's no real example there. Maybe it's more, that's not there either, but anyway, so we can find some better examples for you to talk about. Nothing. Okay, we'll do it another day. Anyway, that's SRG. We'll get over to MNY. Anyone else got anything you want to quickly look at? Just from this leg, this looks pretty good. So this is probably more of what I was just talking about. You can take the break at 230, but there's been quite a few candles on the way down that you start to break. I mean, you're going to be wary that I like to look at two moves down. So if you've got this kind of expansion higher, got a bit extended, I'd like to see two moves, pull back, squeeze out a few more on a second pullback, especially if you've got especially if that should move up. That's your anchor to the trend here. It's moved up and it's extended that leg. It's probably equal. So at the moment we've got this kind of extension. We've got a bit of a pullback here, held, worked. So we've got this leg up here. It hasn't really corrected compared to this leg. So that's a bit more extended in that respect. So when it's a bit extended like that, I tend to look for, especially when the anchor hasn't been broken. That's your anchor to the uptrend. The anchor's down here. Hasn't really been broken. Even if you're taking the anchor around 182 or 3, expansion higher, it tends to need to flush out a few more people. Okay, so you got to be wary that the entry that I just told you about, I was just talking about, is more when it's back on the MAs. Okay, so this kind of move, if we see something pull back, sit on the MAs, pull back to 2, takes out that little minor level, squeeze out a few more buys, and then start to lift from there. That's what I'll be looking for. Okay. Do I look a bounce? Yes, I do. True north. So we were just talking about that earlier on. I've always been thinking that the US dollar could bounce, but we're right at that level where a lot of markets are poised to get to rally hard, especially commodities. Commodities will lift. Gold will be good, and gold's holding the daily trend up. So just go back and look at the start of the stream, and you'll hear a bit more info. We're talking about the what do you call it? US dollar. So where were we? So yeah, I'll just be wary. I mean, that's why the break that I was talking about when you got candles, candles heading down from highs, lows, and you're taking that break at that, say, that second candle when it starts to lift, might do it on the first bounce candle because it could easily do that. And if you take the break of the previous day, I think then we can, you can head straight south and get caught out. But if you wait for 1 or 2, it's starting to show a bit more signs where you buy that break there, you stop and go below, you bought the break just in there, and you're taking, a couple of down days are getting wiped off the cards, and you're anticipating that we're going to take up to the previous high up here. Okay, so that's the entry we're just mentioning. Now, in this case, to be safe that we're not going to get this kind of secondary move down, you just take a break at that 230. Take a break at 230, then you're not really, you can forget about this kind of scenario playing out, and we're breaking. It depends where your risk is too. If you're taking a massive risk, your risk level is going to be below that zone at 210. Then just draw that in below 210 here. If we break out to the high, so you've got to stop on entry at 230, risk below 210. Whether that percentage term is too big for you, obviously you can change your risk in dollar terms when you're trading shares in the CFDs. But if it's in percentage terms too big for you, then you might have to just give it a miss. But that break there, sort of, you don't have to worry too much about getting caught up in this or getting caught up in this, right? And it stops below, and then you're anticipating that's going to get through 230. You're looking left to see any other levels that could be a concern. Really, the next level's up at 3. Okay, so may not be too bad, this one. Goldman Sachs still recommending PGH as a buy to a target price of 286. Let's have a look. I'm not a big fan of, research. I mean, I'm going to sound bad. I reckon they could be biased. They could talk their book. To me, technical says everything. I like to use some support for fundamentals as well. It's not the reason I buy, though. Fundamentals is not the pure. I can't buy fundamentals, nothing else. When someone tells me that's oversold, oversold, it's undervalued, whatever it may be, I won't buy it. I'm always buying according to the chart. Obviously, you do read stuff just to support the view that it is lifting, but I rely heavily on my my technicals, and I think it means I have to do less work. All right, so I've got Bluetooth keyboard, which tends to turn off a lot. And I get this sort of thing, it just doesn't work, and you have to wait. Nothing's working. All right, great. There we go. Now it's decided to work. So let's PBH points bet. Is it the one? I've got the wrong one. PGH. Pack Group. So they got it at 286 up near these highs. Look, could be right, I don't know. 296, sorry. I'm still recommending PGH to buy to a target price of 286. So are they suggesting buy it here, get out at 286? Or what? That's still, to me, that's not looking so bad because consolidation through here too. This is your sort of first. It has had a minor pullback here. Yeah. So it's a minor pullback there. It's falling there. Yeah, let me just see. I'll just have that. Here we go. There's a few levels, and it's pretty obvious. You put it one up at 296, 286. You're below this key level where it's had some problems with it, 290 before. Don't know what their reasonings behind it, and this is what I've never understood with fundamentals. You can get so many different views. I mean, 10 cents is not much, I guess, but it's quite a bit in percentage terms when you're looking at 286 and 296. 3 or 4, was it 5% off? 5% difference. Now I find that kind of weird. I mean, why are they varying at maybe different models they use? Who's right, who's wrong? They're both professionals. They're both fundamentalists. I'm assuming good ones. So that's why I like to see. That's why I like my technicals to really tell me a story, because then you see every player that's in the market. They're either in or they're on the sidelines. There's no other way about it. And you're looking for signs that it's starting to lift. Now if we're looking at that leg up there from low to high, what's our lows there? Somewhere around say 120 up to about 240. It's double 120 off to 320. You're looking up somewhere around here. So that's going to take us through that, if that's the case, through that 290 zone, that 290 resistance zone. Okay, so and that's how I sort of measure out your volatility projections. You got good little leg up here. I mean, that a lot of stocks got sold off, so it's kind of hard to look at that from a technical point of view and go, oh, that's realistic. I mean, there's fear-driven moves which kind of don't stick to your pure technicals. And then there's your more technical moves where people are soaking it up. The market's a bit less fear into the market, a bit more orderly, whereas some of this sort of stuff is completely unorderly, if that's a word. So I tend to look at that thinking, oh, maybe that's overextended. Maybe your fair value is up here. Who knows? But either way, we've got a good run up here. We pulled back. Sellers have started to come in, but it was getting constantly soaked at 12, and then it started to lift again. So this move up here is where we're looking for a potential move up to $1.20, which suggests that it's taken us through. So you're going to be watching, if you're buying in here, with that little break there. I mean, this is ideal. We've got contraction, so we're still sitting on the MAs. It has to hold 230 for me. If it holds 230 and we start to get some sort of price action that we can buy off for an entry, we know where we're going to place our risk. Maybe below 230, 225. We're buying it. And what I'm saying here is, we've got that move up. That's your pullback. We might get something like this. We know where we're going to buy, and we're looking for that lift, that continuation off the MAs, and we're looking for that lift of this leg up, major leg up. And like I said, 290 is going to see some sort of concern up there, and it might be that it doesn't ever get to 320 because people have been selling it there before. But you've also got to take into account that move down has taken out a lot of buyers. All right, so whether that's a legitimate level, there's going to be more sellers there, because if you didn't sell it up here, didn't sell it previously, you've been holding on, you might have bought it here anywhere basically above, say around 220. Up here, you're going to be underwater. All right, so if we get up here, may or may not find any pressure and bang straight up, or we may not. So Goldman Sachs recommended period to buy target 286.16. Yeah. So it's kind of tough ones, buy targets. That's why I like to look at. The fact is, they're both on the upside. If that's the case, they're both believing there's more value in it. and we're just looking for an entry. If they're saying, everyone's saying to sell, and we get a chart like this, you might want to think twice. All right, any more questions? I hope I answered that, Zesty. I mean, I can't say why they got a differences of opinion. Everyone's got their different models with analyzing markets. Some factoring in a bit more bullish, some less bullish, some factoring in more emphasis on one area, less emphasis on another area. Um, but they're still, both are still bullish in that. Just this leg here is, it's bullish, it's going up. We're sitting on top of the MAs now. It's whether we start to get more of this, but we could sell off. We don't know, but either way, if we get a setup to go long, it's worth it. And first target you'd be concerned would be that 290 zone. And if they're both, who's that one? Morningstar wrong, we could be looking at 340. I mean, there's no reason why that these markets are blowing away a lot of these consensuses at the moment. At the moment, it's a bullish market. No one's willing to jump in. There's a lot of FOMO. It doesn't need massive liquidity, but there's a lot of, like I said, Morningstar value something at whatever. Goldman might be valuing it. The market can just blow straight through. So it's kind of hard to use that as a hard and fast guide. I'll use it as, okay, if everyone's saying it's going up, fundamentals saying it's going up, and I get a good entry setup, great. The confluence is there. The best stock, good question. I don't know. For us, we've had a couple of goodies. We're not, with my style of trading, I'm not trying to hit home runs, especially in this environment. So anyone that knows, I might leave a lot on the table, which, for lack of a better word, sucks. But we don't know what's going to happen in this environment. No one really expected this kind of bullish move. If you did, you got to admit there's a lot of luck involved in the way this market has really bounced, and we're brushing aside any sort of fundamentals. Macro environment, we're brushing aside that. So there's a bit of luck if you're just holding. So if you're going to hold, if you're that kind of person, you're that way inclined, I'm guessing you held through the pullback as well. You didn't sell out of anything, or you didn't take a hit. So to turn around and say, I've done really well trading, it's not. It's luck. But if you're trading it, which I always like to trade the market, trade what I see. Like I said, we just got stopped out of OPY because of trading it. That could go higher, but I'm just happy to look for a re-entry, and that doesn't look too bad if we can start to hold. Next couple of days, hold within the range of this candle of 4 and 450, say on OPY. I just look for a new entry. So we're looking to take expansionary moves, trading with momentum, and as little risk as we can. Okay, no problem. Enjoy too. As little risk as we can. So for us, I can't remember what the recent one. We've had a couple of goodies. We just got out of that, booked some gains on that. It was probably about 10 cents clear. I think Mesoblast were doing great right up until they got slammed. I think we're up 25% on that before it got slammed, about 20% in one day. We took gains on it, on Mesoblast, which was this pullback. So we're looking quite good right up until that day. Got slammed, got stopped out. We got stopped out on that open, I think. On the final part, so we're already taking partial on that. And it's back up and above. So that's a tough one. What else? We've got BGA still looking nice, heading higher. That's probably, I think, somewhere around the 10% mark on that. I can't quite remember now. We may not have. No, we've taken a partial on that. I think at 25. I can't remember our biggest one. Our biggest ever share was SPT. Now, SPT has just kicked off too, which is a shame. So, hear me okay? Yep, all good. Anyway, this one, SPTs, was a cracker. We had that from about 97 to 190, 95 thereabouts when we finally closed it. So that was good. So there's been some stocks that have kicked on. There's a lot that's been kicking on. So when the market's bullish, before this massive sell-off, when the market was grinding higher, it's still bullish. It was looking good. You tend to leave things a bit longer, looser risk, all that sort of stuff. But the way it is at the moment, I'm not willing to leave really loose risk. I think if it's going to keep going, we're going to get another entry. Things are going to play out. We're going to get more entries. I think I'm erring on the side of caution the way the market is at the moment, and to really make sure I know where my risk is on any one trade, and having a bit tighter risk when the market starts to get extended. Say SPT for now. I mean, not saying that's extended, but we're up near two. We're up near previous highs, where it's been a few times before. I wouldn't be having really wide risk trying to hit for a home run. If I bought it at 160, I wouldn't be having my stop at 120, for instance. Say you bought this break here, you bought 160, you got your stop below there. I wouldn't be doing that just now because of the overall economic risk, the macro environment, and all that. I mean, if it plows through from here, it's going to be strong. It's going to take out two anyway, and you don't have to worry too much. There's a chance if it does pull back, for whatever reason, the US gets sold off tonight, we get hit on the open, and we take a bigger hit to that than I would have liked. All right. So anyway, I better finish up there, guys. So I'll call it a day. Thank you very much for joining me. Any questions, send through to an email to support@tradesetup.com.au. Remember, take a look at our website. And just to let you know, any of the charts I'm using, if you've got any questions on those, that's on Trade Direct 365. Most of you would know, but if anyone that doesn't, take a look at that website. That's www.tradedirect365.com.au. Anyway, guys, thanks for joining me, and we'll be back in tomorrow morning at about 9:40, so we'll do that shorter version of the morning playbook. And then I'll start to put together a video on what I was discussing on the Hang Seng and bits and pieces. So, yeah, any questions, email them through, and we'll speak to you again soon.